And a mixed session on the local markets today. For all the news, I caught up with Martin Lakos from Macquarie Private Wealth. Well, Martin Lakos, the energy sector seems to have led the way. Presumably that was the higher oil price and Woodside results.
Yeah, ticky indeed. In fact, the key oil stocks were up between 2 and 3.5%, so pretty solid on the back of an oil price that rallied 2.5% in New York trade, softened a bit in our time zone, but certainly rallying on the back of the prospect of better economic conditions out of Europe once the Greek bailout has now been approved, as well as obviously some ructions out of Iran. What was interesting, Ticky, that our market actually opened down, and we were down 20 points at one stage with no follow-through out of Europe or the US on that Greek bailout situation. We did steadily improve through the day, closing modestly in positive territory. Largely, we saw the PMI, the manufacturing index put together by HSBC for China. Now, that's still in negative territory at 49.7. Just a reminder, over 50 looks at expansion, but it was an improvement on January. So the market's sort of like that, along with the fact that we've had some pretty solid results in our reporting season.
OK, a couple of other stocks now. A few seems to have been lit under the share price of One Steel. The results were yesterday, but I mean, it's a pretty slow burn reaction there.
Well, we've actually had a couple of very solid days, and again, the stock was up nearly 15% today, or 13 cents to about 95 cents. It looks like there's follow-through from yesterday's result, given upgrades by analysts in the marketplace, but also probably a fair amount of short covering. It was one of the one of the stocks that had large short positions.
Now, we've got a couple of companies, Computershare and Iris Market Technology. They're both leveraged to the stock market and activity there, aren't they?
Yeah, look, very much so, and two very different results. In the case of Iris, cash flow was disappointing, was down, and also operating costs a bit of a problem. The stock was down 22 cents, and the outlook are very cautious. In regards to Computershare, they're benefiting quite clearly from the potential of cost out on their Bank of New York Mellon acquisition in the United States, and that stock was steady through the day.
And Blood Products Group CSL seems to have pleased the market with its results.
Yeah, very much so. A little bit of a surprise there. They got a contribution that was almost double expectations from their intellectual property and licensing area. That's the group that actually receives the royalties from Gardasil. Behring actually did very well also. The only headwinds for CSL was in fact the currency, which knocked $95 million off the performance of that result. But the stock was up 77 cents. That's up 2.5%. So the market obviously took it quite well.
Sounds pretty healthy to me. Martin Lakos, thank you very much indeed.
Thanks, Ticky.